traders, good evening. Today I'm on the 1st of June 2020, around 8:50 p.m. post dinner, and I thought it's a good opportunity to quickly create a follow-up video on the monthly take on the Indian equity markets. This is the monthly chart of Nifty Spot. And I reiterate that we are still holding well within our channel drawn by these red lines. The May series was marred by extreme degree of volatility that we saw. It was a marginal negative month. And today was the first day for the month of June, and it had actually opened up well. In fact, a very interesting fact that I noticed, this was the first day of the month of May, which opened with a gap down. And this is the first day of the month of June, which opened with a gap up. So it seems like the market has come a full circle from where it left the month of April over here. Nevertheless, check. Nevertheless, we have on our monthly charts the index holding well, and it seems like it's all set to retest the psychological level of 10,000. Now, I would show you the weekly chart over here, where I have kept this horizontal level at the psychological 10K mark drawn. Very clearly, we had earlier signs of supports, and we can expect same thing from this level to act some amount of resistance. We should not discount that possibility. Whether it will happen or not, that is to be seen. But we should be a little aware as the index stretches itself towards the 10K mark. I also have this falling channel, the black colored channel, if you can see here, this one. And the index is back to its border, the upper border, an extension of which will retest its levels of 99.70 and 10K, where I have a beautiful Fibonacci confluence. And of course, there are few serious gap downs also. So overall, it seems like the index has picked up beautiful momentum to start the month of June with a big gap up. Follow-through movement coming in from good large caps and a little bit from the broader markets also. And I hope that this momentum stays for 10K. I'll be keenly watching how it deals with 10K, which are the stocks, which are the sectors, which can make this move, keep the move, and maybe extend it further. So I quickly did run check on the performance of the sectors, and I have put it all down in this Excel sheet for you. This time, this was the month of May. I have kept it in the same Excel sheet. It will be easier for us to evaluate further. This time, I have created two monthly performances, columns wise, a 1 month performance and a 5 month performance. Essentially, 5 months are over to this calendar year from the month of January to May. So I would like to see which are the sectors doing well or not so well year to date and last month. So if I sort first in terms of year to date, the only sector that stands out is the Nifty Pharma. And we've been categorically saying that the Nifty Pharma has turned around, and one should continue to keep a long bias on that. Now, in this Excel sheet, I have added 3 more extra columns to bring some more clarity. I've got the daily trend, I've got the weekly momentum, and I have plotted have shown you the relative strength. Now, these are calculations done by a few proprietary approach which I use on the charts. They're not very difficult, simple, but it helps me to gauge which sector is performing how, and it also helps me to map which sector is placed where. So 1 month performance of Nifty Pharma is positive. The year-to-date performance for Nifty Pharma is also positive. The daily trend is up, the weekly momentum is positive, and it also shows positive strength. So definitely, if you are an investor trader, going forward in the month of June also, you should keep pharma and pharmaceutical stocks on your radar and look for buying opportunities. They can be breakout trades, they can be buy on dips. In either case, you should not create a bearish stance on the pharma. It is a relatively stronger sector. If you go back to the 5-month performance, there's no other sector which is positive, they're all negative. The second best and third best are FMCG and IT. Now, IT also falls under the same category like pharma. Uptrend, positive weekly momentum, and the strength is also there. So both these sectors continue for the month of June also to be looked as to buy on a dip or a breakout. Essentially, what I'm trying to say is keep IT and pharma stocks. Your approach on these two sectors should be more from the long perspective. Do not try to go short on them. They might fall, but I would not like to participate in that fall because that fall may be short-lived. Very interesting aspect has come up on the Nifty FMCG. Now, trend up on the daily time frame, momentum positive on the weekly time frame, and the relative strength has to some extent gone flat, means it's struggling to get back its strength. That should come from stocks like Hindustan Unilever, ITC Tower, etc. We will look into these stocks in a while. So FMCG also you should keep in that category. All right. Between these three, if you look at the long-term charts, let's go to the charts now. These are the Nifty indices which I've created separately. Let's go to the weekly charts. Now, if I show you Nifty Pharma, just look at it. You don't need not look into anything else. Just have a feel of the chart. Long-term downtrend, bouncing back. IT, strong uptrend. After the sell-off, bouncing back. And FMCG, strong uptrend, consolidating, trying to find its foot back. So definitely FMCG and IT, if you look at a slightly larger perspective, the long-term trends are far superior compared to pharmaceuticals. And as a bundle of pharma, FMCG and IT, we should continue to keep a positive approach even going forward in the month of June. We might get opportunities on a dip, which I think is likely in pharma. We might get opportunities in FMCG, which can be breakouts, and same with Nifty IT also. The fourth sector that you should also keep, which is in an uptrend, which is the weekly momentum is positive and relative strength is also there, is the Nifty Energy. And of course, a big role Reliance plays in this sector. Before I take you to the stocks, the new sector on the block, which I'm going to keep next month for a possible buy on a dip candidate, is the Nifty Metal. The main reason is it has moved into a relative strength positive zone, means it is performing better than the benchmark Nifty. The momentum on the weekly time frame has gone positive, which is a good thing. The trend on the daily time frame is kind of mixed up. It's kind of flat. Few stocks like Jindal Steel, Tata Steel has given exceptionally good move, but it's fairly beaten down if you look at a 5-month performance. It's kind of flat if you look at a 1-month performance. So can there be further movement? Possible, but not breakouts, buy on a dip definitely. Why? I'll show you some charts and explain that to you. So let's net this up. Pharma, FMCG, IT, energy, and metal. You should keep them aside and you should look for long opportunities in them, primarily because of two things. They're outperformer and their weekly momentum is also positive. Now, if I come here and I look at, let's say, the FMCG space, Britannia, I will take you to the weekly charts. Britannia did exceptionally well. There was a swing buying opportunity here, which played out exceptionally well. And that stock is hitting close to life highs. Colgate Palmolive, also a good candidate. Dabur has recently gave a good move, a 3-bar move, which should tie down a little bit, but it still has hope for further upsides. Hindustan Unilever is a turnaround stock. I think it should do better this month, followed with ITC also, though it's in a strong downtrend. Jubilant Food is eyeing the lifetime high. If you look at these weekly charts, don't you think that most of them are a little stretched? Nestle is definitely one stock which is hitting life highs. So don't you think that stocks like Tata Consumers or Jubilant Food, and then there was Dabur and Britannia, they seem to be a little stretched on the weekly time frame. That's why I would look to participate in the FMCG on a dip. What about IT? HCL Tech has given a very impressive bounce back. Infosys consolidating. Just Dial does not play such a big role. Mindtree, big breakout candidate above 910, 915.20. It's a breakout candidate. Do keep a close watch on Mindtree. NIT Tech is also doing well. It's kind of tiring down. TCS is eyeing to get back to this consolidation. Tech Mahindra is a breakout candidate. It has given you a move, and Wipro has already broken out. So IT seems to be a little more on the breakout side compared to FMCG. Stocks you should definitely keep an eye on is Tech Mahindra and Mindtree, followed by HCL Tech, Infosys, and TCS. Those three stocks, HCL Tech, TCS, and Infosys, you should look to buy on a dip. Participate on a swing, typical swing trade. Let's look at Pharma. Automotive Pharma, stretched, definitely yes, stretched, but look at the beautiful move it has given from the levels of 300 to 700, 730. It should tie down a little bit. This is the daily chart. This is the monthly chart. It should tie down a little bit, and that's why I would probably approach Pharma from buy on a dip again. Biocon, bang, we got a beautiful breakout today. Cadila also is one stock which is all poised to go further up. Cipla is holding well to its gains. Divi's Lab, beautiful move to a new high. Dr. Reddy, similar cases. Glenmark is a slow mover. It's a laggard. Lupin also is not participating as good as the others. Sun Pharma also, I think, will play a good role this month. They're all consolidating. On the daily charts, you look at Sun Pharma, you look at Lupin, you look at Dr. Reddy, Divi's. They were all consolidating, and now a fresh move is coming. So these are all swing candidates. Buy on a dip, wait for the trend to evolve, wait for the short-term dip, and then play the next swing up. So that's pharmaceutical. Play on a dip. FMCG, play on a dip. IT, dip on the large caps, breakouts on the mid caps. Energy. Now, oil and gas, predominantly it's Reliance, which is playing out exceptionally well. See, buy on a dip. I think it's all placed for a 1580, 1590 test once again. But it's stocks like IGL and MGL, which seems like breakout candidates, especially IGL. If you look here, it's consolidating after the move. If you look at the daily chart, it's got a typical head and shoulder kind of a pattern. I've got this channel placed. As long as this channel holds, I think we've got a 500 or further upside. If it breaks 450 or 440, then this possibility is gone. In that case, the head and shoulder may play out. But breakout candidates, both MGL, this is MGL, which has given a breakout, and IGL. Apart from that, the stocks, the oil marketing stocks like BPCL, HPCL and IOC don't look that promising, the typical trading bets. But I think it's Reliance, IGL, and MGL which we should take away from the energy space. And now let me take you to metal. Now, metals stocks like Jindal Steel are approaching long-term resistances. Lows over here, close to the 135 mark, the long-term moving average. It's likely to tire down. There's no doubt that few stocks like Jindal Steel, JSW Steel still has some headroom, NMDC, are likely to slow down, especially stocks like Hindalco also. But Tata Steel is one stock which has given a fresh move after a pretty long consolidation. It's been consolidating since mid-March, and we've got a big 7%, 7.5% move today. Today is the 1st of June. And it looks like a nice ascending triangle breakout to me. It's got immediate resistances close to the 330 mark. But it's a reversion to mean kind of a play. And I think that Tata Steel going forward can also play a role this month. So if metals have to continue, I think considering it's been a flat month for metals, 2 consecutive positive months for metals also, relative strength has gone positive. I feel that stocks like JSW, Jindal, and Tata Steel should be looked to be participated on a dip. I'm not going to chase breakouts in metals like I would like to do in stocks like Mindtree under IT and IGL under energy. But metal, I would like to go a little slow and try to participate on a dip. So these are the 1, 2, 3, 4, 5 sectors you should keep aside. Not much change there. If you look at the 5-month performance, or if I sort it in terms of smallest to largest, PSU banks, private banks, Bank Nifty are the key losers over the last 5 months year to date. And if I sort in terms of largest to smallest in terms of 1 month performance, which is the month of May, I see that the same list is there at the down also. So what do we get? What do we get is that the sector, the pocket of the market which matters the most, more than 30% weightage, is the one which is participating on the fall, and we have seen that it has participated in the recent bounce back as well. So banks and financial services, I would personally keep a view of going short on a rise, which we have a rise now if I get a proper shorting opportunity. But I'm not gonna go overboard long. If I get quick trades, short-term intraday or 2-3 day long trades like we got in SBI, Bank Nifty, ICICI Bank, it's fine, but not very optimist on the banking and the financial services right now. When will I get so? I would like to see some relative strength coming in. The trends can reverse later. The weekly momentum are positive. They can hold, but I would like to see some strength coming in. Strength means that it should perform better than the benchmark. That's not happening. The short-term trends are down. If I add real estate to it also, the weekly momentum is positive, which is a good thing, but the relative strength is down for all these sectors. So going forward, you cannot ignore this pocket because it matters a lot. But my approach is hit and run trades in them. And the other ones, which we discussed a little bit earlier, are the ones which are far more concrete. There's one more sector which is in a negative relative strength, which is auto. Now, auto, if we go there, if we look at the Nifty, sorry. Yeah. If you look at the Nifty auto index, pretty good move over the last 2 months. It's likely to hit the resistances close to that 67, 6800 mark. Impressive. And if I look at the individual stocks, which makes up the auto, we've got the likes of Maruti, which has done pretty good, and it seems like there is potential, but it's kind of stretched. If you look at Hero MotoCorp, Bajaj Auto, and Maruti and M&M, they seem to be a little stretched. M&M still gave a good move, 5%, and can extend further up, and I think it will, but little stretched on stocks like Bajaj Auto, Hero MotoCo, and Maruti as well. Tata Motors I'm not considering much because there's not much left in the stock right now at 89 rupees. I'm not looking at the auto ancillaries, the pure four-wheeler, two-wheeler space. Hero MotoCo, Bajaj Auto, I think the first half of this month will be tired. It might stay slightly on the softer side and give us opportunity to buy on a dip, like it has been giving us since early April. Dip to buy, dip to buy, dip to buy. So I think that will continue, but it's at serious resistances. This is Hero MotoCo. Similar kind of story you will find in Bajaj Auto, which will face serious resistance at 2800 from this gap down. So auto, don't go overboard right now. Auto, play on a dip, please, and always keep an eye on this heavyweight Maruti. So going back finally to this sheet, I would say auto is something I would be a little cautious and look to buy on a dip. I don't have the relative strength coming in auto. Hopefully it will next month at the end of June. But nevertheless, the view for the month of June going forward is bullish, cautiously bullish, I think would be a good word. 10K is on the cards, and the important thing is to see how the Nifty behaves once it reaches that psychological 10K mark. This move so far has been led by large caps, the stocks which matter a lot. Mid and small caps are still kind of flat in terms of trend and relative strength. The broader markets are still not as participative, so that needs to come in also. We have the Nifty 500, which is close to 20% this year so far. So I would be closely watching towards the first quarter of this financial year, which will end at the month of June. Which sectors perform well vis-a-vis the others? But I'll be keeping an eye again this month on pharma, FMCG, metal, IT, as we discussed, and banks, I think, and financial services, not creating a medium to long-term view. I think it's still a little on the weaker side. So hit and run short-term trades within the banking and financial services. I hope this video was useful for you. Do share your feedbacks, such suggestions as well. Once June ends, I will create and maintain the same sheet and create July for you, and we'll see how it plays out. Till then, everyone, take care of yourself, trade well, trade well.